All righty, good evening, everyone. My name is Kevin Hurley. I will do your commentary today on the Hurley Investments Market View commentary for Monday, the 13th of May. We're in May now. With that said, kind of a big group. It's kind of funny. I usually get bigger groups when we have issues or problems in the market. And if I was to ask you today, what is the problem in our market? Okay. That's kind of funny. I'm just going to write your answers out because I like them. I really do like them, and I think it's kind of funny. So I've got an answer that says China. And then the next answer says, hold on a second. I'm going to shut the window. Chinese tariffs. We have too much liquidity. We have just not in my pocket. Okay, too much liquidity, but meaning just not enough in my pocket. Fear and overreaction. Dumb people. I like that one. Any other comments? Anything else? All right, so I don't know if China's a problem. And really, the Chinese tariffs did spark today in the downside. But the Chinese tariffs don't equal to the market cap we lost today. How do I say it? For all intents and purposes, I might have said it today along the lines of Chinese retaliation to our raising of tariffs and Trump being pissed off that they backed out of months of negotiations. That's how I would state the issues today. I'm going to be honest with you. Too much liquidity. I might have thought too much liquidity would prop our markets back up. Someone also said after the fact, and I agree with that. So you and I both were listening to Fox News and or CNBC, but the trade deal, and I'm going to put it this way, was built into our markets and now is being backed out. Mary, that's an interesting one that you gave me there. That's insightful, because in all honesty, I didn't think the majority of it was in. I still thought we had and I still do think we have at least a 3 to 8% pop in our markets. Now, I'm getting that going back to some highs of, well, I should have it and I don't have it. going back to some highs of the Dow this year, of being at, it looks like a 26,951. You could also maybe say a high on the S&P 500 of 2954. You could say on the NASDAQ over 8,000. What was that? 8,100. 8176. So we're coming off those highs, but we're coming off those highs of only, not very much. Let me put it this way. Coming off the highs and down maybe 6%. It really is a non-issue. It really is maybe not too much to worry about. With that said, I am going to make an adjustment on Boeing tomorrow. And I'm going to save an adjustment that I plan on doing to get me out of Boeing that's not quite going the way that I want it to. The whole day, my decision was to go bearish or to wait it out and look for an opportunity to dollar cost average or enter a new position with cash on the sidelines. I'll be honest with you. I've got a new guy that kind of came in at the worst possible time, but we're doing really good. Market was down 2.41% today. It was down like 0.47. I can live with that. That's reasonable. I don't know if he can live with it, and that's where we got to make sure I'm on the same page as he is, that I understand his risk tolerance. We're close to picking up more shares of Boeing. In fact, if I was to look at a chart on Boeing, which I'm sure I can do, which I have right here. Here's Boeing. If I was looking at Boeing on the chart, do you enter Boeing today? I see a couple of no's. So out of curiosity, where do you enter Boeing at? If you don't enter Boeing today, where do you enter Boeing at? Would it be on that green line? Did I kind of miss it? Is it closer to right there, just under 330? Do you wait for your crossovers? Do you tell me something like, Kevin, you've got a green line right here. Yeah, none of that is going the way that I want it to. Let's find a way to back that out. There's my straight line. Go down to here for my eclipses. You could say I've got it right there. You could say on the Williams percent R, I've got it right there. There's a lot of different opportunities I see in Boeing. And really the key is, what am I going to do, or where am I going to make my decision on adding positions to Boeing? Adding positions will include, for all intents and purposes, adding positions will include, move this over a little bit, will include cashing in some protection. And I'll tell you, I made a mistake already on FCX, but we picked up 500 more shares for both individuals on FCX. The problem is, where do you think I took that opportunity at? Looking at that chart, where did I take that opportunity at to add shares of FCX at? Where would you have taken the opportunity? Should have waited to the pivot point. But yes, I used a round number. So like $11.08 or $11.03, I took off my protection and I added 500 shares. And then the sucker went down today and went down a pretty good amount. I mean, let's face it, it's going down. I'm not particularly worried for the same reason as we're way oversold. So we've got a pretty good bounce back coming institutional wise, looking at institutions, and we're just touching the oversold when, for all intents and purposes, the last time it touched the oversold, it went from 950 up to 12.5. So I'm okay. If it goes down 9.5, I might have some explaining to do. Because it's down 40 cents and I've added 200 shares, I think I'm okay and I think I'm in the clear. A lot of what this comes down to is risk tolerance. And do you think this is the big one where we lose 40% plus of our market? So let me ask you, there are 13 of us here. Is this where we lose 40% of our market? You tell me. I don't have a poll set up, but give me a yes or a no. Do we lose 40% of our market right here? Is this the big one? So that was pretty cool. No way. No, 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 no. So there's 5. What about the other 8 of you? Is this where we lose 40% of our market? 5 out of 13 say no. How about the rest of you? So that was really interesting. I got 3 more no's, so there's 8 of us that say no and 1 that has a question mark. So 8 out of 13, that's about 2/3 say no. So let me ask you the next question. If this most likely 66% chance this is not the big drop, probabilities are on our side, partially because obviously there's going to be some kind of Chinese deal that's going to get done sometime in the future. Why are so many people freaking out? Someone asked why. And I think this isn't the big drop because we still have too much stimulus. We still have too much of an economy going right in the United States, because I still do think there's too much at risk on both sides, just as much for Trump to get reelected again as it is for China to not lose 1/3 of their GDP. But I'm not ruling out that this couldn't be collusion on the Democrats to ruin the Trump election. Democrats are colluding with China to totally back out of the deal and get no deal done to try to get Trump unreelected. The comment was made, people are employed fully, no crash and rise, no large debt except for printing money government. So why? Yeah, I don't know why people are freaking out, but I can tell you, inexperience with the stock market and the way that you've traded in the past doesn't make up some of the downward movement. So you're subject to losing 40, 50, 60% of your portfolio. So I get the understanding on why you're freaking out. But you shouldn't, if, as it's been coined, if you're using the Hurley investments way of trading. If you're collar trading or protecting yourself to the downside, you're going to be okay. Well, Kevin, there's some things you don't have protected. Yep. Let me go through a couple things I don't have protected since earnings. And again, we may have had a 6% drop here, but Ford has fallen from $10.50 to $10.08. It's 42 cents a share. I'm looking at the chart, didn't even finish at 1050, probably finished closer to 1046, 1048. We're looking at 40-cent drop. Visa. $165 down to $157. Holding the 200-day today. Half of that drop came today. I wonder if half of Ford came today too. 30 cents. So 3/4 of the Ford's drop came today. Apple we have protected. Disney we have protected. Baidu for their earnings on Thursday we have protected. Keith, what's another big position that we have Oh, Micron. Micron we have protected at 2250. That's a significantly bigger drop. No, that's not Micron. Under Armour, excuse me. My bad, Under Armour. Under Armour from $23.99 down to $20.95. $3, that's more than a 10% drop, about a 15% drop. Holding the 200 day. A lot of my decision day was, well, where's it going to bounce? And I like that we're holding a lot of the 200 days on individual stocks, and more importantly, I really like the fact that we're not even down to our 200 day on a couple of our indexes. Apple down below the 200 and the 50 day. Gets its golden cross and gets hammered. As I take a look at our charts, we're bearish. We're bearish and broke the 200-day simple moving average. Now, the good news is no one really follows the Dow. In all honesty, if you think big money or anyone of any importance follows the Dow that's in the stock market, you need to take a look at the benchmarks. And the benchmarks are not the Dow. The benchmarks are the S&P 500 and the NASDAQ. Facebook, I forgot about Facebook there. Thank you, Keith. S&P 500, I would tell you we are bearish, but we are holding the 200. In fact, we held a pivot point today at S2, so that's 28.13. Came close to it. We are below it. So in all honesty, we're still holding the 200. Sorry, but we are definitely bearish, right? And looking at the NASDAQ, we also are still holding the 200, but we are definitely bearish. So I'm making some changes. I don't think we have our 3% growth in May, but I do think it can happen. As I look at some of the earnings, Ralph Lauren, Macy's, probably not going to do all that good, but Alibaba can, NetEase can, Walmart could, Nvidia could, Baidu could. John Deere, I don't think will do all that well. And unfortunately, that'll happen on a Friday, which is options expiration. So if you were to ask me where I think the week's going to go, I'm saying higher, but giving most of it back Friday. All right, let's see where we're at. No real economic reports that I'm paying any attention to. And economic reports will not move our markets this week. I don't even think housing starts and building permits will on Thursday. Leading indicators usually does. I don't think it will. Retail on Wednesday, I don't think it will. If you ask me how I'm looking to trade, I'm extending protection out from earnings. I have a couple pretty interesting Information pieces here. Hackers steal over $4 million worth of Bitcoin from one of the world's largest cryptocurrency exchanges. Makes you want to go into Bitcoin, right? How to play Visa. If you wonder why we're in Visa, what we've seen since 2008, please go through and read this. Just take a peek and look at your growth profile on Visa. And this is after a 4-for-1 split at $278, I think, 270-ish maybe, a couple of years ago. Visa's been an amazing position to be in. I have an interesting article here on improving margins to push Under Armour higher, but DTC increases as a risk. Please read through this. And last but not least, I have an interesting article that came from my newspaper here about China retaliates on tariffs, the stock market goes into a slide. Pretty easy to understand what's going on, pretty simple. We all knew this, but the damage is very little, in all honesty. So with all that said, what questions do you guys have? What questions do you have that I can try to answer for you today? And yes, I didn't do it, but I am looking to change Boeing from a bull call, a July 390 400, into a 390 380 bull call. It'll be at a break even. If we get a little bounce tomorrow, I could do it for a profit. And if you go and attend my trade findings and adjustments tomorrow at 6 p.m. Mountain Standard Time, 8 p.m. Eastern, I will go through my adjustment for my adjustment if it reverses on me. Any questions? Did I add any protection today? No, in all honesty, I did not add protection today because I had protection. And for some of my returns, S&P was down 2.41% and I was only down 1.47. So I almost beat the S&P by a full percentage point. With the risk of having a deal come together, I felt I did not need to make a big change. I'm beating the market. I'm really fearful we're going to get a big bounce back, like a ridiculous 34% bounce back. And again, maybe like an 8% bounce back throughout the week. So I did not really add any more protection. The question was, do we take some profit off of profitable positions or do we wait for the dead cat bounce to occur? Whether it's a dead cat bounce or not, I was going to wait for the dead cat bounce to occur. Are there any other questions? So that's also a good question. What am I looking at in the near future? Well, I'll be honest with you. Baidu's fallen dramatically. Disney has. Apple. Visa a little bit. Under Armour a pretty good amount. I'm getting ready to pick a level to pull a trigger on some long calls, leap long calls. I'm also looking at dollar cost averaging some of my positions that were profitable and that still are slightly profitable. So that's where I'm leaning at. And the stocks I mentioned are the biggest ones on my target. Good question. Are there any other questions? Okay, I'm going to get this posted tonight. I have a little more leeway now on what I'm posting. So I'll get this posted tonight. I appreciate you guys being here with me today. You're welcome, you're welcome, you're welcome, and you're welcome and good night, Abraham. You guys have a good evening. I look forward to seeing you tomorrow evening. Bye bye.